The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 17th of May, 2021. Big day, economy reopens. And on the podcast today, Tim Watt, CEO of Shield Therapeutics, explains why they listed the company's shares on the OTCQX in the United States. And also on the podcast, Tony Reda, founder, president, CEO and director of Tectonic Metals, listed on the TSX Venture, discusses the business and upcoming milestones. Also, Alan Green, CEO of Brand Communications, talks about Caerus Minerals, Altona Rare Earths, Advanced Energy. And at the end of the podcast, I have those two lists for you, the top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs too. Check out these lists at voxmarkets.co.uk, where you'll see lots of other content. In fact, there's a smiling face of Paul Hill there talking to the guys from Cakebox, and worth checking out there. They've done some excellent growth, even in lockdown. There's some Traders Cafe with Zach Meir. He looks at some bulletin board heroes. Novocyte, article there on those. i3 Energy, there's an article there. Union Jack Oil, and lots of stuff there. Check out our COVID-19 index. What is it? Top rise of the day is Novocyte, up close to 6% to 428. Biggest faller, Tizion Life Sciences, down 5% to 76.5. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Tim Watts, CEO of Shield Therapeutics. STX is the ticker there. Tim, thanks for joining me.
Hi, Justin. Nice to be here.
Yeah, and you've announced that you've commenced trading on the OTCQX best market in the United States, and so we'll discuss that in a bit and why you're doing that, and the benefit, of course, for shareholders here, there, and everywhere, really. But before we do that, Tim, for people not familiar with Shield, just give us a brief summary, if you could, what it's all about.
Yeah, so we have a product for the treatment of iron deficiency. It's an oral product. We think it's got some unique advantages over the existing oral products and over the intravenous treatments. This is a product which is already being commercialized in Europe by our partner Norgine. We've out-licensed it in China. And in the next few weeks, we are going to be launching the product in the US ourselves, which is obviously very exciting.
Yeah, absolutely. So that's a clue there of launch in the United States. So take us through this market. What's it all about? The OTCQX and why you're listing there, Tim?
Yeah, and why we're listed is because we are about to launch our product Acrifer in the US, and we think that the product's got potential over 5 or 6 years of perhaps growing to $300 or $400 million and generating a lot of cash and a lot of profits. So not only should be as an investment opportunity should Shield be interesting to UK and European investors, but also to US investors. Now there are retail investors and perhaps the less sophisticated investors in the US may not be comfortable in buying and selling shares on the London AIM market. And what the OTCQX market allows them to do is to buy and sell Shield shares, which will be priced in dollars, and they can trade them during US working hours. So it makes it much, much easier for them. And what happens is they place an order on their own local broker, who will then go to one of the US market makers, and the US market makers will come to AIM and buy and sell shares accordingly, and effectively then mirror that back into the US. So the OTCQX market, it's not an exchange. We haven't got any extra regulatory requirements. It looks into what we have to do for AIM and makes sure that we're compliant with that. And so there's no significant extra cost for us. But as I say, it makes it much more easy for US investors to buy and sell our shares. So we just think it's a great opportunity. We don't think there's any downside. We just think if US investors like the look of us, then it will increase liquidity, it may increase value over time. So we think it's a good step in the right direction, bearing in mind that we're about to launch Acrifer in the US.
Yeah. So basically, it's like a shop window, isn't it, in the US? I mean, almost like your backroom stuff is all based on AIM, but it's a shop window for US retailers, isn't it? Retail investors.
That's a great way of looking at it. Exactly that. As I say, we've not established a listed share in the US at all. This is purely, as nicely put, a shop window.
Yeah, and you say, and because there's less sort of regulatory sort of compliance, it's easy to do, is it? Quite.
It's very easy. There's an annual subscription of about $20,000. We've obviously had to incur a little bit of cost in just getting there and implementing it. But the obligation on us now that they've vetted us, they did their due diligence on us, is just to make sure that all of the regulatory filings that we're required to do in the UK and on AIM, that those are reflected on our OTCQX page on their market. So as long as we continue to make our comply with our UK regulatory requirements and make those visible to the OTCQX market, then that's it. So minimal extra cost.
Mm-hmm. Absolutely, marvellous stuff. Okay, well, if someone's listening right now, Tim, likes the sound of what you're doing but are not yet following the story, just give them 3 quick reasons why they should hit that follow button on your page on Vox Markets and add Shield Therapeutics to their watch list, please.
Okay, well, first of all, I think we've got a great product in Ferrocru, or it's the European brand name, or Acrifer in the US. Secondly, the US launch is coming in the next few weeks. And thirdly, I would say at the moment, I think the market valuation does not really reflect the opportunity from that US launch. So I would say those are the 3 reasons.
Excellent stuff. Tim, good to chat to you, and hopefully we'll catch up in the not-too-distant future. Thanks very much.
Thanks a lot, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Tony Reda, founder, president, CEO and director of Tectonic Metals. That's TECT on the TSX Venture over in Ghana, of course. Tony, thanks for joining me.
Thank you for having me, and you're welcome, Justin.
Yeah, we get a lot of, our audience is a big resource base there of investors and traders as well. So I know lots of them, do often look at the TSX. So it's nice to get you on, because I've often had quite a few people saying, can you get some companies on from TSX or from ASX? So it's nice to get you on. So first of all, a brief summary, Tectonic Metals. There's a clue there in the title, but could you give us a brief summary, Tony, as to what you're all about?
Yes, we're a gold exploration company predominantly. We do focus on other metals such as copper and silver. We're exploring in Alaska, targeting large-scale districts, and our goal, quite simply, is to find the next gold mine.
Yeah. So, okay, the obvious question at the moment, of course, and there's a good reason behind it, but why gold? Why do you like gold at the moment?
Well, there's so many reasons. It's right now it's roughly $1,800 US an ounce, and it's that price for a reason. It's quite challenging to find, and it definitely serves as intrinsic value as far as currency. I cut my teeth. My first ever company that I worked for was a gold company, and so I got a soft spot. My background is Italian, so we actually had a gold jewelry business back in the day. So, I've always been around it, and I'd like the fact that it's extremely hard to find and it's coveted by many and well understood. When you look at all them different minerals out there, gold definitely, whether you're in Europe, in North America, in Asia, it definitely, you talk gold and people's ears perk up. So that's kind of why we're after it.
Yeah. Okay. So I'm looking on your website here. It said you got 4 projects there: Tibbs, 70 Mile, Maple Leaf, and Northway. Are any of those projects a priority, or are they all running together?
Yes. So first of all, I'd say for projects in a portfolio, it definitely has merit. Obviously, you can't spend an equal amount of time and capital on all of them. The ones that we've had the longest and the ones that are going to get the most of our time, energy, and capital this year are Tibbs and 70 Mile. Those are both 2 gold projects in Alaska that are going to be drilled very soon here. Okay.
And all 4 of your projects, are they all in Alaska?
They are, yes.
Okay. And what's it like operating in Alaska? I mean, is there a problem with seasonality there, the weather and stuff?
Seasonality can be an issue but it can also be overcome. There's 7 producing mines currently in Alaska. Exploration projects can run almost all year round. At the end of the day, you definitely need a break from the field. Your geologists do, and also the team needs to digest the information. So, Alaska is a great jurisdiction because it's very much untapped, and there's great infrastructure, there's high-grade mines, and for us, we're trying to find the next tier 1 deposit. So we have to look at jurisdictions that can actually offer that, and not all jurisdictions do. So we're big fans of scale and big fans of grade and high margin, and Alaska is definitely a place that even on the political risk side of things definitely ticks a lot of boxes.
Yeah, and so Tibbs and 70 Mile. So where are you with Tibbs at the moment in as far as exploration? What's what part of the journey you're at there?
Mm-hmm. Well, actually, for both projects, they're kind of at a similar stage. There has been some previous drill discoveries back, say, in the mid-1990s on both projects. We've also made some drill discoveries, and we also have some untested targets on both those properties. So where we like to position the projects, and even when we acquire them or where we advance them, is called the discovery stage. Yeah. And that's where you can really can create transformative wealth with success with the drill bed.
Yeah, absolutely. And as far as finance is concerned, have you got enough money? Have you raised some money recently, or?
Yeah, so we do have a couple $1 million in the bank right now, and we literally just announced a financing less than a week ago. Our target on that financing was $3.5 million, and we are completely oversubscribed, massively oversubscribed, actually. So I do expect us to be in a very strong financial position once we close this financing, which is fully oversubscribed. We'll probably have north of $77 million in the bank account, more than enough capital to execute both drill programs, which are starting in the first week of June this year.
First week of June, okay. And when do you hope to get sort of further news out when you start the drilling?
Yeah, so the drills are turning the first week of June. We're going to have some rocks into the lab very soon, shortly thereafter. So I expect a steady influx of news, more specifically drill assay results, from July right through to October, November of this year.
I see. And what do you know about where you are, where you're drilling? What kind of studies have you done there so far? What do you know about it?
Oh, that's a great question. So there's so much work that's been done. And so, there's desktop work, there's field work, there's geophysical surveys that we've conducted over the property. We've done soil sampling, rock sampling, trenching. We've also done some RAB drilling. So that's rotary air blast drilling. I call it a scout drill to kind of suss out some of the key areas. And like I said, we have some bona fide discoveries that we've made and that the historical explorers have made that are completely open along strike. Some of the drill results, for example, that we're going to be following up on are 6 grams over 29 meters, 5 grams over 15 meters, 19 grams over 5 meters. These are some really high grade results, and definitely want to demonstrate or validate that these targets have the merit to turn into a meaningful deposit.
Yeah, absolutely. And so, looking forward, then, if you can, getting a crystal ball out, Tony, if you could. So you got June. That's when the action is starting. Of course, the drill starts turning there, and you get some results after that. And then, ideally, where would you like to be in, say, 12 months' time from here?
All right. Well, I'd love to have a few more discoveries under our belt. The visibility for scale at these discoveries. So again, like when I say visibility for scale, that's like turning a discovery into something meaningful, a meaningful deposit possibly. So that would be a great place to be in. I would love to also have a couple partnerships, perhaps with a few. We have some existing partnerships, but perhaps some new ones, and also some new projects in the pipeline. That's part of our business model, is to keep this pipeline fresh and active, and to monetize these assets fairly quickly here. And create value for our shareholders.
Yeah, absolutely. Marvelous stuff. Okay, Tony, it was good to chat to you. And every day on the podcast, I highlight the top 5 sort of most followed companies on Vox Markets. Of course, at the moment, you can't get followed on our platform, but people, of course, can do research on you. And so, as always, like I do, can you give us 3 reasons why someone should add you to their watch list, please?
Most definitely. So, first reason, we're a team that's done it before. Our previous company, we took a project from moose pasture to 5 million ounces gold. We raised almost $200 million. We produced a very robust feasibility study, and then we were acquired for $520 million. That was in 2016. Our directors and management team have other successes as well from the past. So, it comes down to the first reason just being a team that is credible, respected, and can execute.
Yeah.
The second reason to invest in Tectonic is that I do think we're at a very attractive valuation right now, hence why we're completely oversubscribed. If you're a shareholder of Tectonic, you're going to get exposure to 2 drill programs, as I mentioned earlier, following up on high-grade drill results, 6 grams over 29, 19 grams over 5 grams over 15. So there's not too many opportunities where you can follow up on such spectacular drill results. And with the 2 drill programs, there's going to be 13 distinct targets across 2 projects that are going to get tested. So there's going to be multiple news releases across many months that hopefully can result in share price appreciation. The third reason why I would suggest that anyone take a look at Tectonic and add it to their watch list is that if you do want exposure to the mineral space or the exploration space, you want to bet on a company that has integrity, has a solid relationship, believes in ESG. And to that point, we are working in Alaska, but we're also working on native-owned land or First Nation or Indigenous-owned land. And in Alaska, they prefer to be called natives. So that's the term that we use. We have formed a partnership with one of the largest native corporations in Alaska. So not only are we working on their land, we also have production agreements on these assets, and we now have them as our single largest shareholder. So we're backed by Indigenous people. And to me, that's extremely important because not only from a risk perspective, but when you work in a jurisdiction, you want to benefit not only the shareholders, but also the stakeholders. And you want them to have a positive and vested experience in this company being successful. And I think that's important.
Yeah, absolutely. Thanks very much. Tony, it's good to chat to you. And like I said, hopefully we'll catch up in the not too distant future. Thank you very much.
You're welcome. Thank you.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Alan Green, CEO of Brand Communications. You're right, Al?
Morning, Just. How you doing, sir?
Good, thanks. For a big day today. Economy reopening back up. And I did actually put a tweet out saying, a survey tweet saying, will you be going to a bar, restaurant, cinema, or doing something related to leisure or hospitality this week? And
yes.
That was an hour ago, I think, or a couple of hours ago. So far, just under 600 votes. And it was actually, it was like a Brexit vote. It was like very close in percentage terms of Brexit. So half pretty much, 49.2% say no, 50.8% say yes. And I'm thinking it's an entire week I'm talking about there, not just one day, of course. But I know already people are going out today. I know people are going out to Paddy, a mate of mine from the Weekend Podcast, is going out. I've seen Clive on Twitter or on the podcast before going out today. What will you be doing, Al? Are you going out this week for a drink, something to eat, or what?
Yeah, well, I'm going up to London tomorrow to meet up with work colleagues. Haven't seen them for I've seen one fairly regularly, but the others I haven't seen for a long time. So we're going to meet up, and also got going to meet a few other people too. But all within an environment that's well spaced out and in the open air. So I'm not going to go inside. I'm also not going to get on the tube. I'm going to get on the train, and then I'm going to either cab it or walk it. Yeah, that's it. Yep. Have you
had your vaccine?
I have. I've had 1 and 2. Yep.
Well, you've had 2. So why aren't you going on the thing then?
Well, the thing is, I'm still hearing stories about people who've had the second vaccine and then they get ill with it. So yeah. So I just want to be doubly safe. We've got obviously, we've taken great care to isolate over the period. So I just want to make sure I'm ultra safe. So I won't be using tubes. I think the train. Well, I don't know. I suppose it's like anything, isn't it? I think the tube is, it's a place where a lot of fetid air gets recycled. So I've never liked going on the tube anyway. But I'm going to actively avoid it from now on, unless there's no other alternative. But there is, because you can walk. So that's what I'll be doing.
Yeah. take precautions. By all means. I do think that the press have stoked up a lot of fear about the variant in India. I mean, and you've got to take into account the figures here. I mean, in India, the less than 10% have been vaccinated. In this country, we're now over 53%. That's huge, and the majority of the people that have been vaccinated, over here, we started from the vulnerable groups, of course, the eldest people going downwards, and 80% of people hospitalised were above the age of 80. They're all been done, double vaccinated, This is now got to the stage where we have to treat it like the flu, because most of us are vaccinated, and the flu comes around every year, and people are hospitalised by the flu, and that's what it is. I mean, we've got a vaccine, the current coronavirus vaccines work well against the Indian variant. That's been shown now. So I think it's good to be cautious, but I don't think we should be feared into, actually now being, restricting our lives too much, because, we've got to move on. It's like, did you see the other day, 99 people were hospitalised, I think it was on Friday. 99, that's all. At the height, it was 4,000. Now, we can't lock down for 99 people being locked up, or hospitalised, because they could have been hospitalised due to flu anyway, or anything like that, because they've got sort of weak immune systems or something. So I mean, there's so many businesses and people have gone through. Like I said, social and mental health has been affected massively. But we are at the end. I'm not saying go mad, but I mean, I think that they do use fear a bit, and it plays on people's minds. It affects people's mental health.
It does, but I think it's also common sense, isn't it? Hands, face, space.
That's a good thing about it. I think if we wash our hands more, because I think if that sticks around and we get that into our behaviour, then that'd be quite good.
It is a good thing. It is a good thing, and I'll be wearing the mask on the train, and I'll walk the other end, and then I'm meeting people.
GIMP mask, you sort of, yeah.
Yeah, that's right. Yeah, I might even take the GIMP mask around the train. Scare a few people. But no. But I'll get to the other end and I'll walk and then it'll be great to see everyone. And but you're right. We have to move on with this. And I think if you've had the second vaccination now, it's a good time to move on. But just be careful and apply the rules that we've been using, because I think it's good practice from here on in. And obviously we're going to carry on social distancing too. So that's it. Mm-hmm. Don't put yourself in harm's way potentially.
Yeah, absolutely. I think. Will you be hugging Al?
I won't be hugging tomorrow, John. I won't be hugging tomorrow, just no. That's not the plan. But you
said John. You made a slip. It was a funny slip up there. You said John. You won't be hugging John. Have you got? Are you actually? Does your wife know you're seeing John on the side? I won't be hugging John. Just John. John. Oh yeah. Ignore John. I didn't mention John.
No, I will be seeing John tomorrow too, and he knows who he is. Hello, John. I'm not going to hug you tomorrow.
Slip there. But you know what? Though I'm not a big hugger anyway. I mean, I don't mind hugging some of my kids and stuff like that. But I mean, people, this trend for like hugging people gets on my nerves. And get off me! I don't want to hug you. That's part of the problem,
Well, I think that's it. I'm not a hugger either. I am with the family and the kids. Obviously that's completely different. But generally speaking, it'll be great to see people tomorrow, and it'll be touchy elbows, and that's about it. So
I think the lockdown and all that and coronavirus has been quite convenient to avoid people you don't want to see. But have had to. Previously, you've had to want to see to think, no, we can't do that because.
I'd love to see, but we're in lockdown. Yes.
There's a guy down the road from me.
Lockdown rules. Yeah.
The guy from the road from me wanted to take me on walks. He wanted to go for a walk with me. He was a neighbour of ours. I mean, I know him to say hello to. I know he's quite religious. And I thought, I don't want to walk around the block with you preaching at me. Probably that's what he sends me links of Christian things. I think. And Felix said, that's spam. I didn't ask for these emails of you singing choirs and Christian. And I also go for a walk with me, and I've used the COVID thing, and then we can't do that because I don't want to catch.
Well, just it won't be happening anymore, will it? Because he listens to your podcast, so he'll listen to this. He'll be mortally offended. He'll be weeping into his cornflakes as we speak.
No, in fact, I wouldn't mind going with him actually, just to argue with him about religion, and say why I
have a theological discussion. Yeah.
And I think after one walk, he won't ask me again. So anyway, let's talk about stocks.
Okay.
What's the first one out?
Okay, so first of all, Caerus Mineral Resources. I know we spoke about this. I think it was back at the start of April, but this company has blazed a trail since it came to market, and of course that was on March the 19th. So we are just barely 2 months into this. We are just on 2 months into the company coming to market, and the company raised 2.2 million at 10p on March the 19th. Shares have already hit a high of 30p, currently trading 25p, and with good reason. And it's rare to find a company that comes to market and literally hits the ground running, which this one did. Based in Cyprus, they've got a portfolio of copper and gold licenses in Cyprus. They're effectively brownfield sites, including former producing mines. And the aim when they came to market was to define a mineral resource estimate of some 20 to 30 million tons of copper and gold. They're working closely with the Cyprus Mining Department, and the Mining Department has a list of what it refers to as remnant resources across the country, including former mines, and these have been incorporated into the Caerus Mineral Resources portfolio. And since then, they've just blazed a trail. The chief executive, Martin Churchhouse, formerly Anglo-American, 35 years experience in the industry, vastly experienced. Anglo-American Goldfields, Georgia Mining Corporation, and London Mining Corporation. The chairman is a fellow called Mike Johnson. And Mike is he's the Rio Tinto Chair of Environmental Engineering at the University of Liverpool, also an external advisor to Rio, formerly worked with Globe Mines, London Mining, Savannah Resources, and a host of others. And they have a geologist on the board, Andrew Daniels, 30 years experience, formerly with Anglo-American, also WMC, Monalco, and others. So these guys basically did all the work prior to coming to market, and they've hit the ground running. They've also they agreed an acquisition on the 8th of April to acquire Platonic Resources, which owns a couple of further mines, the Truly mine and the St Nicholas projects, and they paid for these assets, paid £750,000 sterling, and they will be undertaking they're currently preparing the site at Truly for a gold and copper drill program. So that's basically in the last 3 to 4 weeks. In the work they've done at Truly since the acquisition, they've already recovered visible gold from selected drill gold chips, and the geological anomaly that was thought to be 10 meters thick is actually 25 meters thick. So it's already exceeded expectations. But really, what's changed, I think, the picture for the potential for the group, and also the scalability of the assets it owns, was on May the 4th, it struck an option agreement with Jubilee Metals. And of course, Jubilee Metals is a huge company, some 400 million market cap in comparison. And the option agreement gives the two of them 6 months to assess what is primarily some 16 assets across the Caerus Minerals portfolio. The agreement means that they can convert one or more into a project joint venture, and clearly, I personally believe that this was all planned pre-IPO, and I am also a shareholder here. I will raise at this point. So very pleased with the progress to date. And
when did you buy?
Had these picked these up. Goodness me, it was just after the float, I think. So yeah.
So double the money there, have you?
Yep, double the money. Yep, that's right.
Now, it's back to the old diversification now. What percentage of your portfolio, total value, do you have in these?
Oh, this is in another dealing account, and it's managed by an extremely successful broker and a well-respected broker in the city. So basically, he put me into these. I'd taken note of these, flagged them up initially on some of the earlier podcasts, and as a result, directly or indirectly, we got involved in them. But I suppose it's probably about 5% overall. So not a great deal. But today, of course, May the 17th, we've had a further update, an operational update from the group, and the North Matthias stockpiles, 24 of the 39 holes have been completed, and they expect to complete the current campaign, really by the end of the week. It's looking to be. I've already mentioned the Truly development. They are preparing the site for drilling. Their work is underway at the Marla asset to establish the maiden JORC resource that we spoke about, and the copper and gold joint venture with Jubilee Metals is progressing across all of the 16 sites, as I mentioned. They expect to complete the Plutonic Metals acquisition within 3 weeks, plus they'll be disposing of some non-core assets, including the Black Pine asset thought to be prospective for cobalt. And there are a further 3 projects now on the table, which they're in advanced discussions with. So, as a mining investor, with some companies you can only dream of this sort of progress, but they blazed a trail already. They've already doubled the value of the company, but we're still, with all these assets, still just at a 13 million market cap, which is pretty modest given what Caerus have achieved already compared to some companies in the sector that have been working on projects for years and have a higher market cap. So, I think really exciting. And if you hold the shares, which I do, I'm going to continue holding these and expecting great things.
Well, why not? Yes, absolutely. I'm expecting great things of all my shares. Otherwise, I wouldn't hold them.
Of course. That's why we own them. Yes.
Cool. And ticker there, CMRS.
Yep.
Up to date. Yes, good rise. They doubled pretty much. Cool. What's the next one out?
Okay, so this is an undiscovered. Well, I say it's undiscovered. It's a long established company.
It can't be undiscovered. It can't be undiscovered because it's listed. It must be quite a few people know about it.
It's listed. A lot of people know about it, but it has a tiny market capitalization considering, and I think it's because primarily Altona Rare Earths, the company.
Hang on, he's been on this podcast 3 times. He can't be that undiscovered.
Well, this is it. But hopefully with this podcast, we can actually sort of raise the lid so more investors can peep on, or raise the hood so more investors can take a look underneath and see what makes it tick. So, but Altona Rare Earths, formerly of course Altona Energy, they had some huge coal assets which were offloaded last year, and the company has effectively undergone a restructuring. And as you've said, you've spoken to Christian Taylor Wilkinson, the chief executive, who's got a very strong background in PR and IR, so he understands the market and what investors are looking for in quality assets perfectly. Martin Wood, of course, is the chair and non-exec director, also chief executive of ASX listed Kogi Iron, and then on the ground you've got Cedric Simonet, who's non-exec director and the geologist. He's done a lot of work with Sega and Fluorspar in Africa, and also he's on the board of the Kenya chair. I can't remember I'm writing there. It's the chair of mining. Anyway, Cedric Simonet, he's a well-established geologist in his. I'm going to have to improve my writing, and that's terrible.
I don't do writing anymore. I can't write. I find it really. When I try and write, I find it really hard. But my feels very undexterous, and my fingers feel very stiff almost. So I'm like an old man. I just because I'm on computers much. I don't want to write anymore. In fact, I even get sick of typing now.
That's the thing, isn't it? When you use computers and then you go to write, it's a different process altogether. You use different parts of your brain to do it. And then, of course, the final non-executive director, Audrey Matupi, who's chief executive of System Logic in South Africa, sits on many boards and has a great deal of knowledge of African mining projects per se. So throughout the last 6 months, the company have undergone a series of fundraisings and restructurings in order to acquire rare earth assets. And of course, rare earth minerals, I don't think I need to go into too much detail about their uses, but they have a multitude of applications, both in military, green technology, instrumentation, and a range of applications. Three projects are the company's got involved in. It has memorandums of understanding with all three options. Firstly, with the Akaswiri project, which is in southern Malawi, which is prospective for a range of heavy and light rare earth elements. They have an option to acquire 75% with Chambray, and they are currently waiting for the current owners, Akaswiri Resources, to confirm the Malawian government approval of the exploration license before they sign. Obviously, that's perfectly understandable. The second one is in northwest Mozambique. This is the Monte Mwambi rare earth project in Tete province. Now, this is on a former fluorspar mine, which Cedric Simonet has been involved in. There are already 165 reverse circulation drill holes over some 12 meters, and they've intersected rare earth elements within at least 4 of those areas, much of which and other evidence of these rare earth elements at the site have also been found on the surface. There's potential to build or develop an open pit mine at the site. It's already near to several operating coal and iron ore mines in the region, and Cedric has publicly stated that he rates it as one of the top rare earth projects available in Africa because of its accessibility and low costs. So developments on Monte Mwambi is that the soil samples they've taken are undergoing further analysis prior to the final decision. Once they make that decision, it'll be a conditional 70% acquisition of the assets. The final asset, and one which I think has got a lot of investors really focused, is in Uganda. It's the Nankoma Rare Earth Elements project. There's an option to acquire 70% of the asset from Leeway Group, and this is in east. It's 130 kilometers east of Kampala, and it's adjacent to the nearby Makutu project, which is owned by an ASX company, Ionic RE, and Ionic have already established a mineral resource estimate of 315 million tons at 650 parts per million of total rare earth elements, including all the key elements. I'm not even going to try and name them for the applications that I described earlier. So this is exciting. It's in the same region, and again, it's a staged acquisition. The company said in an update on April 30th that again, soil samples have been collected and they've been sent to Australia for assay under the guidance of Altona's in-house metallurgist Gavin Beer prior to the final decision. And the company stated also they expect to complete and own all 3 of those by the end of the second quarter. So in other words, about 6 weeks away. In all 3 jurisdictions, they've hired local law companies to help them with the process. And just as an aside, Paul and Catherine McKillen have increased their stake from 4.5% to 6.75% in the company. I think it's significant because they are moving to main market, of course, and that's that I think is going to prove to be a catalyst for the share price, along with the completion or otherwise of the projects. But I think what's caught my eye about Altona more than anything else is the fact that it's trading on a tiny market cap. It's just 2 million. So there's rarely the company is funded. It has cash in the bank, and there's rarely there's no premium at all for any of the assets that the company has got involved in. Once it moves to LSE, once it completes on these assets, then I think to own at this level, it could be a really exciting return. Clearly not without risk, but at this level, I think it's a really exciting company to get involved in.
Mm-hmm. And they are listed on Aquis, aren't they?
They are. They're ACWS listed, shortly to move to the LSE main market. Yep.
Yeah. Marvellous, yes, and no doubt we'll get Christian on again. Okay, what's next, Al?
Okay, so finally finish off with Advanced Energy. ADV is the EPIC code. Now, some may remember this as the lesser spotted Andalus Energy from some years ago, but it's of course as happens when companies maybe offload their assets and move on from the previous administration, they restructure, and that's what's happened with Advanced Energy. And whilst it's operating in the same region, that is in Indonesia, East Timor, this is the new company is a completely different kettle of fish. We have Leslie Peterkin, who's the chief executive, formerly from Woodside Liquid Natural Gas, also worked for Shell as well. Mark Rowlands, the chairman and non-executive director he's also CEO of UKR NAFTA, the oil giant in the Ukraine. I think it employs some 20,000 people. Also formerly with BG Group and Shell, and he's an Oxbridge educated fellow. So a very experienced board in place. The company have an option and have completed on that option to acquire 50% of Carnarvon Petroleum Timor, which is the subsidiary of ASX-listed Carnarvon Petroleum. Now, the Carnarvon Petroleum Timor were awarded a permit in 2016. They own 100% of the Buffalo oil field at Timor-Leste, Eastern Timor. This is a long-standing oil field that was developed in 1999 by Billison and Nexen, was previously producing 21 million barrels of oil over 5 years at its peak. As often happens with old projects, new technology is brought onto the site, and a new generation 3D seismic survey has shown that there is a larger asset in place than was originally thought, with an estimated 34 million barrels at one level, and the highest at 63 million barrels of oil at the 3C level. So it's a low-risk appraisal well. April the 19th, Advanced Energy raised 22 million, just under 22 million at 2.6p. To basically raise the money to fund 50% of to acquire 50% of the Carnarvon Petroleum Timor, to fund the B10 well at the Buffalo oil field. And last week we had an update from the group which confirmed the Buffalo 10 well was to be drilled in Q4 2021. They have a contract with Petrofac, the oil services giant, to source long lead equipment for the Q4 drill, and of course they paid now the $20 million for 50% of the Buffalo oil field. The government approvals have been secured by Carnarvon, and there is the potential, as Leslie Peterkin said in his statement, to deliver some 40,000 barrels of oil per day by the end of 2023. So, clearly, what they've got to do first is complete the drilling Q4. So it's a slow burner, but I think as we get towards Q4, by that time other assets may well have been added onto the table as well. But this could be very exciting, because clearly if the asset is proved to be bigger and the size that's indicated in the 3D seismic survey, then there could be the value of the company could progress significantly from here. Currently, shares are trading with a 23 million market cap, 2.2p. They've traded as high as 3.7p and as low as a penny. So we're currently midway between the two, but probably want to buy and tuck away. But once news starts to come in, and once we start to see data coming back from this well, it could get very exciting.
I don't find oil and gas exciting at all.
Well, I think, some each to their own, but
exactly, isn't it? Yeah, I think maybe it's been so bearish on oil, it could have a good run, but I just don't, drilling and all that stuff, and I don't know.
It's a potentially huge field, this though. It could be transformative.
I know shareholders are very excited. I'm just, when you were talking then, literally, I was glazing over.
Okay, I'll have to.
But no, I'm sure there are lots of investors there who are holding that would loving that, Al. It's like, I suppose it's like a bit of football, I suppose, isn't it? Generally you don't really care about the teams, do you? Too much,
Well, no, you don't. But of course, I'm also very pleased yesterday because Spurs pulled off a very good win at home against Wolverhampton Wanderers. So,
do you know what I'm saying though about stocks and shares? It's like supporting your own team. You got your own stocks, and you like them, or you like areas like that. But anything outside that, pretty much, you're not really into the football teams. Do you actually care that much about Manchester United, or you appreciate them because they're doing well, or Man City, or whatever? If they're doing well, you appreciate sometimes the play. But you don't really follow them that much, do you? You don't care.
Well, you don't follow them, but I think you're right. If there's a game on TV and you're a neutral and it's a good game involving one of those two teams, then yes, you sit and watch it and get excited. So I suppose in the same way, investors holding other stocks that don't like this sector might listen to it and think, I'll put a note in the diary to come back and have a look at that as they start the drilling Q4. So that's it. It's just really making investors aware that there could well be an opportunity here with the company, and what's the share price action. To my mind, if the share price dipped back to a penny, it could well be worth will be worth picking up at that level. But the company raised a decent slug of money, and investors are I also hold this stock too, by the way. So
there we are.
There we are. Yep, put that out there.
Right at the end.
Well, I actually hold stock in all three, so I'll declare that.
That's fine. I prefer that. I prefer people's. Do you know what? I prefer people having stock and talking about their companies than not having stock and talking about other companies. To me, I'm thinking anyone really. I'm thinking if people come on and talk about companies and they don't hold stock, I think, why are you talking about them? If you don't hold stock, if you like them so much, why aren't you buying stock in them?
Exactly. Yeah. Exactly. Well, I do own stock in all three of those companies, so that's and investors can make of that what they will. Yeah,
the three big boys. Three to avoid there. I'll hold them. Right. Biggest no, to be honest, people say about my stocks, but there we are. No, listen, do your own research, everyone. There's always opportunities, in any stock there. So. There you go.
Shares can go down as well as up.
Yeah, well, they often do. But there we go. Marvellous stuff. Cheers, Al. Thanks for that. And we'll speak you next weeky.
Cheers, Just. Speak you next weeky.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5, Codal Minerals. What is that? 2%, pretty much to 0.292. At 4, Guild. It's up 2.5 to 8.05 pence. At 4, Futura Medical. Up 7.2% to 47.19. At 2, iNexus Global. It's an on-mover there. I did a video on that actually recently. 12.25. And at 1, Turn, down 4% to 29.25. Okay, it's time for the top 5 most read RNSs. They are as follows. At 5, EQTech, EQTech, acquisition and recommissioning of Italy plant. At 4, 40 Pharma, presentation of Blotics IBS Phase 2 at DDW 2021. At 3, Zoetic, update on chill orders. At 2, Codal Minerals, gold exploration and lithium mining license. At 1, Novocyte, inclusion of S&P SIG in the NHS England framework. That's it for the podcast. Thanks for listening. Muchos appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.